I don't trade them all. What I'd like to see is outside and inside bars. Okay, by an outside bar, I want to see a bar that is not just an engulfing bar. Okay, this is a bearish engulfing bar here, because the body is not actually. Okay, this is actually a bearish engulfing bar here, because the body takes out the previous opposite body. So you had a bullish month here, and this month is a bearish engulfing candle. That's not what I want to see. What I want to see is an outside bar, which is different. An outside bar is the full range. Okay, so this month the full range over or engulfed the previous month's range. And basically what that has a tendency to mean is that in this upward trend, okay, the trend continued in this month, but it was rejected above the previous month's high and it closed below the low. Okay, so it's not like this one's more of a continuation of trend. This isn't. Okay, this is a change of sentiment, and that's what we want. It's all about sentiment. Okay, it's all about, is the bias to the downside or is the bias to the upside, and that's why we want to look at larger time frames, because we want to know whether or not the longer time frame bias is to the upside or to the downside. Okay. So there's all the settings. At the moment, I mean, looking at a monthly chart, okay, it looks, believe it or not, and I couldn't trade it. My pockets aren't deep enough. A large flag formation. Okay, so great to see in hourlies or even sort of 5-minute charts, because we know the bias again. Okay, so on a flag formation, we know we've got a bias to break to the upside. What do we also know from looking at this formation? Well, we know the legs. Okay, so in impulsive cycles, re-Elliott wave, okay, we normally have 5 wave sequences up or down. Okay, and they're called our impulsive cycles. Okay, in corrective cycles are normally made up of 3 waves. Okay, so here in our corrective cycles, okay, and these are inside waves as well. We've got 1, 2, 3. Okay, clear that, and then we can see this as 1, 2, 3. Okay, 1, 2, 3, and then down. Okay. Now, if you are a firm believer of Elliott wave, which I'm not, the basic term, so this cycle can be in 3 or 5 waves, which is cycle 1 or A. Okay, cycle B, which is the corrective cycle to the upside, should always be in 3 waves. Okay, so we've got 3 and we've got 3, and then they say that in the cycle C has to surpass the bottom of cycle A. So this is A, B with our subwaves, okay, and wave C has to take out the bottom of wave A. Okay, so a 3-wave correction, 1, 2, 3, and that's what we've seen. Okay, the third wave, wave B to C, and this is why I don't really like Elliott wave, because you can sort of fudge the figures if you like. The third wave should be made up of 3 or 5 waves. Okay, so it's a bit of a toss a coin job really. But so we break it down. So we've got our monthly. We see that we've pushed back up. Now we've literally talked about Ishimoku cloud, okay, and higher time frames. Okay, Japanese. We obviously look at Japanese candlesticks. Ishimoku cloud is formulated and made by Japanese traders, or was made by Japanese traders. It's only sort of going back 5-10 years that any books have been made or written, converted into English, that actually explained how to use or how to trade Ishimoku cloud. Now, if these Japanese traders only look to Ishimoku cloud in larger time frames, why should we break their rules? Okay, they made the tool, so we should take note of what they have to say. Okay, and here, as you can see, deep cloud cover. Okay, and here, literally, I don't know if it was to the pip, but this high from October was the top of that cloud, okay, and then we rejected, or we corrected lower, is what we should say, okay. Inside bar. So here let's break it down for our bars, talking about price action. So we've got an outside bar here, okay. This moves price action to the downside. There are no acute monthly reversal candles from that point, okay. Insider army. So we said that the two candles that we wanted to see were complete outside bars. Well, I don't think I mentioned the other one, did I? Or inside bars. So it's complete opposite. An outside bar tells us of a change of trend. An inside bar, i.e. this one, and this one, tells us of indecision, because we haven't continued the trend to the downside.